All right.
All right, let's see what's happening in the global space now. We'll start with in Hungary. We see the retail sector showed modest growth in March, with calendar-adjusted sales rising 0.4% year-on-year, according to the data released today from the Central Statistics Office. This follows a stronger revised increase of 3.2% in February. A breakdown of the KSH report reveals diverging trends across sectors. You see food sales edged up by 1.2% annually, while non-food retail surged 5.9%. Fuel sales remained nearly flat, posting a marginal 0.1% gain. To other matters now, see Vodafone revealed today that their CFO, Luka Mucic, will step down early next year to take the helm of Germany's top real estate firm, Vonovia. The telecom giant confirmed it's already hunting for his successor there, so we're seeing a leadership change right there in that company. Then we see the U.S. Treasury Secretary Scott Bessent and Trade Representative Jameson Greer will hold high-stakes talks with Chinese Vice Premier. He arriving in Switzerland this week, marking the first major negotiations since both nations slapped punishing tariffs on each other's goods earlier this year. The meeting, set for May 8th, comes as the world's two largest economies seek to ease tensions after a bruising trade war that saw the U.S. impose 145% tariffs on Chinese imports, triggering Beijing's 125 retaliatory strikes. The conflict has already, begun weighing on economic indicators in both countries, fueling global market anxiety. Before facing Chinese officials, Bessent and Greer will meet with Swiss President Karin Keller-Sutter, according to statements from their offices. The discussions could signal a potential, talk, though neither side has shown signs of, backing down, from their hardened trade positions. So who knows? Maybe we'll get a deal, with the U.S. and China. And to Germany now. German industrial orders, that jumped about 3.6% month-on-month in March, far exceeding analysts' expectations of a 1.3% gain. The Federal Statistics Office reported that today the rebound, adjusted for seasonal and calendar effects, marks a stronger than anticipated recovery after months of sluggish demand. The surprise leap suggests potential green shoots for Europe's largest economy, though economists caution that sustained growth will depend on easing global headwinds. The Statistics Office noted all data remains publicly available through its regular releases, so investors will definitely be looking out for that. So to some other matters now, and definitely it's about that meme coins at this point. The new data from blockchain analytics firm Chainalysis reveals a stark divide in fortunes among investors of Donald Trump's meme coin. That's fight, meme coin. The data show that while around 2 million wallets bought into the token, 58 wallets made more than $10 million each, totaling roughly $1.1 billion in gains. Then about 764,000 wallets that purchased President Donald Trump's, that's a Trump meme coin, they lost money on the investment. The Trump token was surged in popularity after being tied to the start of Trump's second term, has seen sharp price swings and highly uneven returns for investors. Definitely so uneven. Just 58 wallets, made gains, and they made really good gains, about $10 million each. Then huge 764,000 wallets. I don't know if you know anybody that falls into this category. They all lost money buying that meme coin. And we do hear people talk about buying the dip, and some have tried to buy the dip, but we see the dip doesn't really rise. So that's according to data from Chainalysis there. So food for thought there. We'll try and get what happened to Melania's coin, who made profit with that meme coin. But to other matters now. As global trade wars escalate and tariffs roil markets, investors are flocking to gold. But critical questions remain. Have the past tariff battles actually driven lasting gold demand, or are these just short-term spikes? Let's talk to Johnny Poxley now as an investment professional, TLG Capital. Great to have you on the show.
Thank you very much for having me.
Yeah, so I don't know if you've seen this before, in the past, with I'm sure we've had, trade wars, before now, and, other tariff policies. But did you see, these kind of trade wars, increase demand for gold? Are we seeing a replay, right now?
So I think what's very interesting and fascinating about the current moment in time is we're almost in a little bit of a state of flux. If you think that Donald Trump's been in power for 100 days, so we're getting a real sense now of what his pledges were during his campaign, what they actually look like in reality. And the truth of the matter is trade wars are going to be a key component. And there's a bit of a sort of equation to it, but ultimately, yes, trade wars do propel the price of gold. So you'll see increased demand for gold and thereby the price come up. Because if you think like when one country implements a tariff on another, country X implements a tariff on country Y, obviously country Y will then retaliate, right? And what that means is the cost of imports and exports will then increase, which will ultimately get passed down to the consumer, right? And then that has obviously ramifications on the economy and so on. And gold in itself is a sort of safe haven asset for many investors because it acts almost a little bit in isolation to a lot of other assets. It's got a very limited supply. It only increases its supply about 1 or 2% per year. So historically, you've seen a lot of demand for gold increase during trade wars and other times of volatility. So I do think the spike you're seeing at the moment is almost like a forecast of inflation that perhaps we'll see later on further down the line.
Right. So I'm guessing if we get a deal now and, the tariff wars, go away, I guess we'll see, gold price, come down sharply. Is that what you're seeing?
Yes, theoretically, if the trade wars sort of peter out and there's a deal, then ultimately I think that will give investors more confidence, right? But it's hard to say as of at the moment, like what that looks like and whether or not it will come to fruition. If you look at the economic uncertainty index, which is probably very closely correlated to the price of gold, it's an all-time high. It's all-time high since COVID. And so long as kind of those kind of metrics remain high, the price of or the demand for gold will in theory stay high as well.
And, when you see these kind of, tensions in the global space, does it lead to the rising, all metals, or is it just gold as a focus? Or investors don't really care for silver?
So I think it's very closely synonymous with precious metals, where you have a small finite supply. So that would be gold, silver, and platinum would be the main ones. Other metals tend to operate a little bit more in isolation. They have their own supply chain nuances and supply chain risks. And more industrialized commodities like copper or aluminium are much more subject to macroeconomic shocks and supply and demand, almost a little bit more traded in the way you might think of as oil. But it's really these precious metals like gold, silver, platinum that investors really seek to as a safe haven asset or a defense against volatility.
Ryan, do you think there are, some other asset classes that, investors might see now as, some kind of safe haven that most investors are not really seeing?
Well, it's a tricky question. I think what's interesting about what's happening at the moment is it's the two biggest governments in the world, so the two biggest traders in the world, the US and China. Commonly speaking, in times of volatility, you would look to US treasuries as well and government assets as a sort of defensive strategy. But the problem you have is the US government is one of the catalysts and one at the center of all this. Right, so that then kind of introduces other questions about why you might flock to those assets or perhaps even some low volatility stocks on the S&P 500. So ultimately, again, I think that really just points towards gold. And I think, again, it's it's really important just to point out we're at the end of 100 days for Donald Trump, so we're just getting a sense of what this premiership looks like. And it seems as if a lot of what he said during his campaign is kind of here to stay. And so I think for that reason, it does, as of today, it does speak to the price of gold, and it does sort of make me wonder or make me think that you're going to see an inflated gold price for the time being.
Right, and we've heard some talk about digital gold, that they've referred to Bitcoin as some kind of safe haven, but we've not really seen Bitcoin act as a safe haven with the price volatility that we've seen so far. But going down maybe say 10 years, 20 years, do you see another asset class rising as that safe haven?
I think Bitcoin, I mean, to me, it sort of seems like it has in the past acted as a very steady safe haven for many investors. If honestly speaking, if you ask me what my kind of asset that I think is going to be a safe haven over the next 10 years, I as you mentioned, Bitcoin has kind of not been that safe haven over the past couple of months, perhaps that you think it might have been. And gold has done very well. So I sort of stand by gold a little bit. And I'm a little bit reluctant to pick out any one asset that I think will be standout as a safe haven over the next 10 years, in all honesty.
All right, so we've seen gold hit, $3,500. We've seen that peak, but do you think that that's the high, for this run, or do you see gold, running even higher? We've heard analysts talk about a $4,000 level. Do you think the top is close, or because right now we're hearing, the U.S. and China, they're going to have talks. They're going to start major talks tomorrow. Do you think the top is, somewhat close for gold?
I think it probably is, because I think we're in a state of flux at the moment, right? It's the key is uncertainty, right? Nobody knows what's going to happen. Nobody knows where we're really at. But a lot of things point towards inflation. So I think once people know a bit more about what's really happening, and once I think the uncertainty will stay, once it comes down a little bit, you might see things settle down. It seems like it's at its peak at the moment. Maybe it will go up a bit further, but certainly when I think we've learned a little bit more about what these tariffs mean, and perhaps after 18 months of Donald Trump being in power, then I think hopefully things will kind of even themselves out a little bit. But you never know what other shocks there might be.
All right, we'll definitely be looking out if, more shocks come. But, the way things are looking, I guess investors will just be expecting that. Thank you so much, Johnny Poxley, is an investment professional with TLG Capital. Thank you for joining us today.
Thank you.